Good morning. We're here to talk down payment assistance today. Edgar at NFM is here with me once again. So we're going to get started pretty soon once a couple people jump on to talk about all things down payment assistance and answer any questions you have regarding those types of loan programs and what opportunities you have with them.
That is correct. We look forward to answering your questions. Feel free to post them here in the comments as you guys go, as you see our feed. Also, perhaps if you have something personal that you would like to answer or want us to answer, feel free to also send us a private message and we would be happy to address it with you.
You can also text me any questions, or Edgar if you have our cell phone numbers, or message us here on Facebook. Post it in the comments. Post it on the comments will probably be the easiest way to get that question addressed.
Yes, absolutely. So we'll hang tight just a couple minutes. I'm going to share the video real quick. If you guys know anyone that perhaps might could use our services, maybe you already bought a home recently this year and you say, hey, this information is great, but maybe it's too late for me. Feel free to pass this along. Maybe tag a friend in this video, share their information, share their contact with us. We would be happy to speak with them, and that way we can we can address them correctly. A lot of people sometimes have credit issues, Adrena, that we work with. Maybe you're in a rental right now and your lease is not up for another 6, 7, 8 months. Don't wait till you're 30, 45 days before your lease expires to say, hey, maybe I should explore buying a house, because you might catch yourself renting again for another year because maybe there's something on your credit that we could have caught now and get you prepared till then. So we want to talk about these things in this video, and then go over some down payment assistance programs and products that we get asked a lot about. So
hey, I see some people that are from not here in the Valley, and I just wanted to tell you guys that Edgar and I can help you guys as well if you're in the state of Arizona. Edgar, are you actually licensed in other states?
We are licensed in Texas and California as well, so we can help in any of those states right here from Arizona. We're doing a lot of relocation loans right now. We're getting a lot of people who are whether it's up for a political reason or just simply a job-driven reason and income-driven reason, we still have a very affordable housing market in Arizona, and people are leaving a lot of expensive cities to come out to Arizona and take advantage of the market here. So whatever the reason drives you here, whether you're a blue state, red state, we don't care. We want to help you find the house that you like at a price and a payment and a program that fits your needs.
Okay, so now that we have some people on, the first thing that I wanted to say to all of you is that down payment assistance is sometimes viewed negatively or has some negative connotations, like you're going to owe the money back or you will get a higher rate, higher fees. And the first thing I want to tell you is that if it is the difference between using a down payment assistance program to get you into your own home versus not owning a home, then by all means, if you're eligible and you want to take advantage of a down payment assistance program, you should do that, because as Edgar, I'm sure, will mention later in the video, that you can always refinance out of it at a later date. You don't have to keep a higher interest rate. As a matter of fact, right now, rates are crazy good. So if you own a home and you want some information on refinancing to drop off that PMI that you have, or to get a lower rate, reach out to Edgar. He can help you with refinancing as well. This week I've been spending some time running some values of my previous clients' homes, and I will tell you that I was astounded at how many people have more than $100,000 in equity.
And quickly, some of those they just bought maybe 4 years ago.
Most of them have owned their home less than 5 years. Several of my clients who have only owned their home more than, just right at a year are already $20,000, $30,000 over what they paid for their home. Those are coming out in the mail this week, and I hope that you guys are excited about those numbers as I am. And also, just think about the fact that when you're renting a home, it's 100% interest all the time.
100%.
So, even if you're paying a little bit higher on interest to get that down payment assistance program to get you in a home, it's still better than 100%. And not only that, but that equity build is the most important part of homeownership. There is pretty much nothing more that you could own that could give you that return on investment. And for a lot of people, that's your source of retirement.
It is. It's a piggy bank. Think how hard it is for a lot of us just to save $200 a month. Okay, let's just use a $200 figure. you're trying to save $200, and perhaps you do good for 2, 3, 4 months, and all of a sudden you got an extra $1,000 in your bank account. We're tempted to spend it. We're tempted to go out there and tap into our savings, or perhaps we're living on that edge already. Maybe expenses are tight. I'm a parent. You're a parent. We know sometimes months can get crazy overwhelming with expenses, kids after school programs, and this way a home allows you to pay yourself. You're paying yourself. Market goes up, down, up, down. That's just a fluctuation of any asset. Yeah. But a home is more appreciative of an asset than it is an auto per se, right? A lot of us buy cars, and you know the drill. As soon as you drive off the parking lot, it is worth maybe 30% of what you just paid for it, and you're stuck with that depreciating asset. Every mile you drive on, every little ding, every little time that you open that door to get in and turn on the key to drive even to the corner, you are depreciating that value of a car.
Yeah.
But a home, you have to live there.
Yeah, and you want to know something real crazy is even people who bought like during the downtime have substantial equity. I actually just ran one that he bought in 2010 for $85,000 in Glendale, and his house is worth like $260,000. And I was like, think about what you could do with that money.
Absolutely.
I mean, that's substantial. And even if you bought prior to the downturn last time, like most of those people, the majority have all recovered value and are in an equity position. So, some talk has been like, oh, what if the virus does affect the market? And so far, knock on wood, we haven't really seen very much drop. Well, actually, no drop whatsoever in prices due to the virus.
Here's where it did affect the market, though. Rates. Rates, guys, it is like a hot sale right now on interest rates. Honestly, it's like every house is for sale at a hot deal right now because of the interest rates. Yeah. The purchasing buying power between now and a year and a half ago, Adrena, it's almost about anywhere from $50,000 to $70,000 more. That means you can literally buy a house that's $260,000 for the same payment that a year and a half ago that house was $200,000. So it gives you that much more buying power. Imagine that right now. Maybe you bought a house 3-4 years ago and it was your first home. You've built a little bit of equity in it, but maybe it wasn't in the right neighborhood. You had to settle, right? You made some compromises. Perhaps now you have kids, right? You multiplied, you got a family now, and you're like, hey, I really like a school district, or maybe your kids are of age now to enter school, and you're like, I would really like to move somewhere else. You can sell an older home, pick yourself up an older one, or in a neighborhood that you like, for probably a less of a payment than what you're actively paying now on your current home. That is unbelievable. Honestly, that's got my wife thinking. I texted you last night like, hey, she rents some values in my house as well too, because we go back and forth. We need an RV gate, little things like that are still missing from our house that we purchased, and it kind of brought that into perspective. Like, wow, you could buy more home, newer home. That means newer appliances, the big units, right? Your air conditioning, your water heater stuff, your
warranties,
that can help you offset that. And for a lot less of a payment that you have. So when people ask, hey, what opportunities are there in this market? Dude, the rates is what making it affordable. Arizona is a powerhouse. We have been a powerhouse for the last decade, and we're getting bigger. Big companies are coming here. The state has done a great job of making tax cuts, and that's why we're a hiring hub here for a lot of places, and people are coming in. If you're into warehouse work, a lot of our labor force is into that type of forklift operation type of thing. Yeah. It's huge business out here. It's huge, and there's big room for the middle class out here to have a decent life. And have a good life, I should say, before it becomes an expensive city like somewhere else. So take advantage of the market. We want to answer some of the questions here with down payment assistance.
Yeah. And I think the $1 million question is, what credit score do you need to get down payment assistance?
That is a great question. So there's many different down payment assistance programs. Some of them come, some of them go. Okay. Right now, the two most popular that we have in the market are Home in 5 and Home in Plus. There are two different, and they operate. They're kind of brother and sister programs, but they do operate with some differences. But both of them have one thing in common. For down payment assistance programs, you're going to need to have a credit score of at least 640. Okay, that gets you in the game. Now, 640 doesn't mean you qualify. There's still some other variables that need to get in there, but at least a 640. And maybe we can put this down a little bit. I'll use the whiteboard here behind me. So For down payment assistance programs, we're gonna need, okay, I'm gonna put DPA, okay, for down payment assistance. The qualifying FICO is 640 minimum, okay? This is gonna be your minimum FICO score to qualify. I'm not sure if you can see that. Maybe I'll use a darker highlighter here. So it's gonna be a 640 minimum FICO score for you to get into the game and for you to even attempt to get into the program. Now, some of the things that we look at when you're qualifying for down payment assistance is we look at, you know, recent derogatory accounts, like a recent collection, right? Recent late payments in the last 12 months. Those are big things that are going to put red flags on your credit. You know, do you have some money of what's called a reserve? Okay, this is big. Okay, reserves sometimes can help you overcome some of the maybe a late payment. Okay, so let me tell you what a reserve is. A reserve, I'll use black this time, see if it comes out more. Let's just say your monthly payment on the house is $1,000. Okay, so you have $1,000 monthly payment on the house. Okay, monthly payment on the house. Now, let's just say in your bank account, after you buy the home, once the dust settles, after you pay your appraisal, your inspection, and your bank account, you have $2,000 left in your bank account. Okay, so we're gonna put right here $2,000 in your bank account. This means here that you can afford 2 months of your mortgage payment. Okay, so you have 2 months of reserves. Okay, you have 2 months of reserves because now you have your monthly payment is $1,000 a month, and you have $2,000 left. This comes out to 2 months of reserves. This can help you with some of the lower FICO scores. Maybe you're just at 640 right now, for you to still get qualified onto this down payment assistance programs. Some of the other things that the state imposes is most of these programs, guys, you have what's called your debt to income ratio. Okay, your debt to income ratio for these programs here, you're going to be capped at about 45% on most of these programs. Okay, some of these programs do go up a little higher than 45% debt to income, but your credit score at this point needs to be 680 and higher. Okay, 680 plus to get higher than your qualifying ratio. Where sometimes the open market does not have those restrictions. The open market can take you up to 56%, which gives you a little bit of more buying power. Perhaps you're almost done with your auto loan. Maybe you have a couple of months left, and that auto loan's still triggering this, depending on the program that you're at. Some debts, depending on your approval, guys, we can eliminate. If you have less than 10 months on an installment loan, us as a lender, we may omit it from your debt, meaning that we don't have to count it. Maybe you bought that auto loan, you're paying $500 a month, and you owe 8 months left on it. Maybe you can qualify as if you weren't even paying that auto loan, because that auto loan has a sunset date. That means that when you took out that auto loan, it's an installment. We know when the date comes to an end, which is different than a revolving debt, like a credit card. A credit card goes up and down. I mean, there really is no end as long as that account is active and you have a balance. Right. Because you can charge it, you can pay it off, you can charge it, and it would be something that would trigger. And I think we have a message here, Adrina. I'm not sure what that is there.
No, it's okay.
Okay, all right. So we just want to make sure that we answer your questions here live on the air. Now, we did get some messages here.
We did. And I know one of the questions that she had asked, or this person had asked, was if you could combine this program with a VA loan.
Absolutely. Actually, the state has their own VA loan with down payment assistance programs, and they're 640 qualifiers, but you can't get down payment assistance with a VA loan. And Edgar, why would you need down payment assistance, Adrina, with a program that already has a 0% down financing? Well, let me tell you where that down payment assistance for a VA loan comes in handy. The market right now, guys, it is super competitive.
Yes, it is.
The sellers have the upper hand. They have the upper hand when it comes to you making an offer. If you're asking the seller to help you pay for closing costs, you're going to be priced out. You're going to be middled out. They're not going to look at your offer. You're going to go to the end of the line. Maybe you get lucky on a desperate buyer that they wanted to sell. But for the most part, guys, this is where the biggest challenge comes. If you have no savings and you want to buy a home and you're asking the seller to pay for your closing costs, the sellers are going to move on to someone else's offer who are not asking. And you may say, hey, well, that's not fair. Well, let me tell you where it does become fair. At some point, when you become a homeowner, you're going to be a seller. Yeah. You're going to sell your home. When you go to sell your home, you want to maximize your profits. That's your house. You've lived in there. You've paid the mortgage. You've paid the rent. When you go to sell, you're looking at your net sheet and you're trying to capitalize on your investment. So why would you pay for someone else's closing costs? Okay, that's going to get you to the front of the line. Now with VA, you say, hey, well, 0% down. Where do I need it? Well, now you can ask from the state to help you out with some of these concessions. Ask you for some money to help you pay for those closing costs. So now you can put a more competitive offer when it comes to down payment assistance. Yes, it's 0% financing. Honestly, VA is one of the best, if not the best program out there for veterans, and it's very well deserved. It comes with a lot of caveats, like no private mortgage insurance on the loan, which keeps your payment low. 100% finance, right? That means that you literally don't put a down payment towards the principal on the house. It's 100% finance, but you still have closing costs. You still have to pay your title fees. You still have to pay your lender charges. You still have to pay your prepaids. Your prepaids are what we call your homeowner's insurance and your property taxes. Okay, and that's where the money from the state comes in. That yes, you can ask for down payment assistance on a VA loan, so you still get all the great benefits. No mortgage insurance, 100% finance, but now you have leverage. You have leverage to say, hey, I got $5,000, Mr. Seller. I don't need help you covering my closing costs. I'm going to pay my own closing costs. That'll help you bump up your offer to the front of the line because you're not asking for anything, and it'll make you a more attractive buyer.
And let's touch on that goes hand in hand with military personnel and people who are eligible for VA. Currently, there is also additional down payment incentives for first responders. So who would qualify as a first responder for that additional credit?
Absolutely. First responders are people that are are in EMTs, okay, registered nurses. Now, you have to show your diplomas. You have to show your certifications to qualify for all of these. Teachers are considered first responders because they're actively in the field with children, and something happens, they're there as a first responder. Doctors, okay, doctors can qualify for these programs. So most of the medical field areas, with the exception of few, will qualify for the first responder. Now, here's where the differences are between down payment assistance programs. That program for first responders is not available in Pinal County. Okay, so that's available in Maricopa County, but it is not available in Pinal, and it's available in other parts of the state too. But I say Pinal because that's a huge one. A lot of people, Maricopa County, Maricopa City, I'm sorry, is out there. Santan Valley, a lot of people that want to live out there. Perhaps you're a first responder. You can still get down payment assistance programs. It's just with the caveat on those first responders is that you get an additional 1% at no extra charge. Okay, so just to give you an example of what I mean by that, I'll go back up here to the drawing board again. When it comes to a first responder program, your first responder. Let's just say you want to ask for a 2% concession, right? On 200,000 purchase price, 200K home. That 2% equals $4,000 in assistance. Okay, in assistance. Now the going rate for this right here might be, let's just say, and I didn't pull up my rate sheets, guys, for today, but let's just say the going rate right now is 3.5% to pull this out. Okay, this is what you're going to be paying on your home loan, 3.5%. Well, as a first responder, you get an additional 1%, so you can actually take out 3% instead of the 2% for an extra. So this gives you $6,000 in assistance at no extra charge. You still pay the 3.5%. If myself as a loan officer, even though I put out a lot of fires, I wouldn't be considered a first responder. If I wanted to get 6% assistance, my rate, because I'm not a first responder, instead of paying 3.5%, my rate might be 4% on my home loan to get the $6,000 in concession. Okay, So this here allows you to take out, you as a first responder qualify to take out more cash without being charged the penalty for the higher rate. Because the way it works is the more money you ask for the state to help you cover, the higher your interest rate becomes. And you may ask yourself, hey Edgar, why is that? Why do I pay a higher rate the more I ask? Well, these loans, Adrena, are what we call bond loans. And if you remember from school, a bond is a circulatory money instrument. Okay, it's money that gets recycled back. The interest rate, maybe the market rate, they're giving it to you at 3.5% for you, but they're borrowing the money, let's just say at 3%, right? There's a 0.5% spread on there. The profits from that money get reinvested into the fund. Okay, so you come along, you want to borrow you want to buy a home, you want to use a first-time home buyer program. The money's coming from people behind you that use the program that are paying a little bit of a higher rate than market. The profits from their loan are being reinvested back into the fund. You come along now and you want to borrow the money. We go in, state goes in there. They said, okay, you qualify, you're eligible. Here you go. They take from the pot. They give it to you now. You buy your home. You close on it. Now, every time you send your monthly payment, you're paying a little bit higher than market rate than you would have qualified if you would have came in with your own money. That the profits from that loan go back into the pot. So people in front of you who want to qualify for this loan, now they get money from the pot, and it just keeps on going. So it's a self-funded program, and that is a difference in what they call a bond loan, which is what the technical term for these down payment assistance programs, versus a traditional loan where you're borrowing from a bank directly, and the profits are going to the bank at that point.
So generally, right now, interest on the down payment assistance is in what comparison to if you had your own down payment money?
Right now it's actually, the table's pretty it's pretty even. We're in a weird market right now, guys, and this is where we have to as buyers take advantage of it. You're in a weird market right now where sometimes that spread has been significant, where it's like, hey Edgar, if I put my own money down, my rate's going to be 4%. If I take the down payment assistance programs, I'm going to be at 5.5%.
Yeah.
And you're like, oh wow, that's such a significant difference that maybe I will save up my cash because my payment is $250 less per month if I come in with my own down payment. But right now though, the rates have dropped significantly, where sometimes there's not that much of a variable. Yeah, the difference is minute. You may qualify, and again, it's all going to depend on your credit score, guys.
Yeah.
And how much money you make. These programs do have some income bearing, depending if it's conventional and FHA. So call us, okay? That's going to be the best information. Everybody's a little different. I always like to distinguish your home loan as a fingerprint. No two loans are going to be alike.
No.
Just because your brother-in-law bought a house or your sister bought a house doesn't mean that you're going to have the same results, good or bad. Okay,
right.
Doesn't mean it's gonna have the same results. So call us. Our contact information will be in here to find out exactly where you would land on. But to answer your question on rates, they're really good. I've seen some right now at 3.125 for down payment assistance. Maybe your score here's the really cool part. Okay, let's just say that your score is not really optimal. Okay, let's just say it's about a 680 credit score, and you want to get into a conventional loan. And in a conventional, on a 680 FICO score, maybe your rate would be a 3.5%, but you have your own down payment. Right now, you can go in and ask for 0% from the assistance, because they also have a 0% option, and your rate might be like 2.875. I mean, it's really phenomenal with the market that we're in, and this is where when people ask, hey, how's the market doing? Prices ain't going down, but the rates did. The rates did drop. And that is where the hot sell is right now, that you have a lot of affordability, a lot of buying power. And if you can lock in right now, guys, you're locked in. I mean, there really wouldn't be a reason to refinance down the road unless, you're taking out equity on your home loan. Maybe you've lived in there a few years, like some people are doing right now that are calling in who we helped buy a house 4 or 5 years ago, or say, hey Edgar, I'm ready to do my landscaping now. I've built some equity in my house. Maybe my wife wants that kitchen. We did that personally last year. We totally gutted the house. We took advantage of the interest rates, and they're actually lower now. So we're looking into refinancing ourselves too, to try to capitalize on some savings and in the long term. So call us. Look forward to hearing from you. What are the questions that we have, Dina?
One of the other things she wanted to know was that she had actually paid off a collection in hopes that it was going to bring her score up, and it did the opposite. And she wanted to know why.
Okay, so there's a couple things with that. The biggest one, and most of the reasons why your score drops after paying a collection, and this is why it's important to talk to us first to find out, hey, if paying off a collection, sometimes you don't have to pay a collection to qualify. In this way, it worked counterproductive. There's something called the activity date in your credit report, right? When the account was reported as a collection. And let's just say the collection was reported back in July of 2018. Okay, so that collection has been on your credit report. It's been lingering for 2 years. It was reported July of 2018 as the last active date for that account. Well, it's been on your credit report, just lingering. You say, hey, you know what? I'm ready to get my credit situated. Let me start off by paying that collection that I got hit with 2 years ago. Let me just go on ahead and take care of it now. Well, when you do that, what's going to happen is the credit report is going to read it like this. All it's going to know is that a delinquent account has now been updated to reflect a zero balance, but it's a delinquent account. So the last activity date updates to today's date, July of 2020. So a bad account from 2 years ago, July of 2018, has now reported on your credit report. Still a bad account, even though it's paid zero. It's got reported in the column of derogatory with a new active date. So the credit report reads it like, hey, it's a new bad account, with a zero balance. So now you have a bad account with it that's updated. So a lot of times you negotiate that when you go to pay a collection. Hey, I want to pay this collection, but I do not want you to update my activity date. And you negotiate that while you're talking to them. Hey, I'm going to pay you, but it's important for you to show this account zero, but leave the old date on the, and they can do that. Creditors can do that. Okay, they can remove that. Or sometimes you may even, the best part is if you can get it negotiated to completely wiped off your credit report, that's the best call. If it gets wiped off, guys, it's like it never existed. Now it's completely erased from your credit report. But again, those are all conversations that you have with your creditor prior to sending your payment. Once you send your payment, guys, and you didn't negotiate those terms, that's it, guys. For you to go back and try to negotiate that, guys, it's going to be an uphill battle that you're probably not going to win. That's a great question. That happens quite often.
That's why it's so important to talk to the lender before you pay anything, because they can run a simulator and let you know, hey, if you pay this account off, it's going to decrease your score X points, and they can kind of coach you and guide you on, how to do that the proper way so that it doesn't affect you from being able to be approved, or even help you, potentially with what you need to say to the creditor to get that removed properly.
That's correct. So again, the lending part is, we all know that the house is the pretty part, right? I mean, loans are boring, guys. We get it. I hate talking about them sometimes. It's just a bunch of, I love what I do, guys, but in realistic things, it's the houses that's interesting. The rooms, checking out the landscape, the location. That's the attractive part. But the financing is 90% of your purchase.
And that's the part that makes people the most nervous.
It is. It's complicated now, guys. We both have a family. Her husband works with her. My wife works with me. So we get it. We understand life happens. Martha just got hit with a collection we're trying to pay off right now. So we understand things happen. You forget about things, and we understand life. So please don't feel embarrassed when you talk to us. Call us. We're going to be intimate about this, and importantly, guys, it's confidential. What we talked about, it's confidential, and we want to protect that trust with you. But we understand things might have gotten ugly in the past. Maybe you went through a rough divorce, a relationship that didn't work out. Maybe you lost a job in the prime where you just thought that you were at the right spot, and unfortunately, some things had to go. And now you're trying to recover. But credit, guys, bad credit is temporary. It can be fixed if you put the effort in it. And we'd love to help be there for you. Some of these plans, guys, are as simple as paying down some couple of credit cards. And we've seen people go from a 550 credit score to a 650 credit score within a 2-week time frame. Some of these credit plans, guys, take a little longer. But it all begins with a phone call. That's the hardest part. And we'd love to sit down and go over with you. And sticking to the plan. sticking to the plan. You know, that's equal as important.
You want to check the questions and just make sure we addressed everything they wanted
of course.
to know.
Let's take a look right here. We are, let's see, collections and credit report. No, you don't need to pay your collections before applying. I think we sort of just answered that. Call us. Let us pull your credit before you do. The minimum credit score for VA loan. Okay, the minimum credit score for VA, guys, is the sweet spot, 620, guys. Below 620, there are VA investors, and they're very little. Okay, so you don't have a lot of options that will go down below 620. Your pricing becomes extremely expensive below 620. So if you're going to go VA, you want to try to get your score over 620. If you're looking for VA with down payment assistance, you you need to be at 640. So those are a couple of things that you know to look out for from the questions that I see here. Again, guys, if there's something we didn't talk about, you know, a topic that you would like us to discuss, we'd love to hear it.
Yeah, and we'll do this again next month, and we will let you know what the topic will be as soon as we decide what that is, and maybe based on your comments and the messages that you send in on what you want to know, we will base the next topic on what you guys want to hear about. I hope that you found value today, and if you did, please share the video, and I hope you guys have a great week, and give us a call if you need anything.
Take care, guys. Thanks.
Yolanda, the phone number is 623-229-6609, and Edgar's is
480-232-4221, and we'll answer all your guys' questions in the comments here in a bit.
All right, have a great day.